Federal Reserve Chair Jerome Powell positive on the U.S. economy, saying he sees no need to drop the central bank's gradual approach to raising interest rates. Wells Fargo Securities Managing Director and senior economist Mark Vittner joins us now. Hey, Mark, good morning.
Good morning.
We heard from Powell yesterday. He's relatively positive on the economy. Are you positive on the economy? And I say that with respect to the Wall Street Journal report that thanks to the tax cuts, we're actually not seeing too many companies raise paychecks.
Well, I think that that's a little misleading. I do think that there's been a little bit more growth in paychecks. I think it may not be showing up in weekly pay as much. It's showing up in one-time bonuses. It's also showing up in stronger job growth. And we're looking at averages and not looking at individuals. If you look at some of the research done by the Federal Reserve Bank of Atlanta, Federal Reserve Bank of St. Louis, they show much more wage growth. But in terms of Jerome Powell yesterday, he was almost giddy. I mean, he said that the economy is in a very good place right now and that the outlook is not too good to be true. And so he expects the unemployment rate to remain below 4% for the next couple of years, but doesn't see inflation worsening and thinks the Fed can continue to raise rates by about 0.25% once a quarter, at least through the fall of next year.
So you're sounding pretty positive as well. We'll get some more numbers on Friday. We get the September jobs report from the government. We're expecting about 185,000 jobs have been created and the unemployment rate to tick down a bit to 3.8%. You think we're going to see wages go up some more, or is this going to be the report that we say, oh, well, we had the hurricane and that's impacting things?
Well, the hurricane may impact things in that the number of hours worked may not have risen as much as it normally does, because the hurricane hit during the survey week. It didn't hit a whole lot of populated areas, though. So I'm not quite sure that we're going to see an impact there, but it's possible that we do. But wages are rising. Not only are raises rising, but the pace that they're increasing is accelerating. So I think there's good news there. We don't want them to get out of hand. They're up about 3% year to year. We think it'll probably end the year up about 3.2% year to year. Next year, probably be up 3.5%. So we're moving in the right direction. Plus, there's a lot of one-time bonuses in there as well. In terms of jobs, though, this Friday we're looking for 185,000 net increase, and the unemployment rate to come down to 3.8%. And those are spectacular numbers.
And what Amazon announced yesterday is pretty spectacular as well. This is Bernie Sanders' reaction to Amazon hiking wages, the minimum wage, to $15 an hour for all employees.
What Mr. Bezos today has done is not only enormously important for Amazon's hundreds of thousands of employees, it could well be, and I think it will be, a shot heard around the world.
Mark, is it that significant, or do you think this is Amazon's insurance policy, if you will, to get in the administration's and in politicians' good graces?
You know, I do think there's a little bit of that in there, but I think that mostly what's going on here is that Amazon wants to make sure that they get the quality workers that they need. And they're realizing that they're going to have to pay up for that because other companies are paying up for that. And believe it or not, I know it sounds corny, but most companies want to do the right thing for their workers. I mean, they really do want to do the right thing for their workers because that's their most important assets. That's how they distinguish themselves from their competition.
Treat us well, we'll treat you well. Kind of like that. Mark, thank you very much. You always treat us well.